All right, what's good, YouTube? Back with day 13. Today I'm gonna do just a talking segment. I'm pretty calm and collective, so if I sound like I'm out of it, I'm not. I'm just calm. This is like my calm voice, and yeah, like let's talk. So for the past couple of months, you guys have been seeing me hit these trades, and just overall breaking them down befores and afters, and making so much money, and all this and that, right? I just want to say that trading is easier than what you think it is. I know a lot of people in this world, or a lot of people in this space, will always make it seem like trading is like this super hard thing to get into, but honestly it's not, right? But yeah, I choose to get on this platform, create a platform, and show you guys this. I wouldn't say this is like the 100% best way to do it, but I definitely will tell you that the way that I trade ICC overall will change your whole perspective in trading. Even though it's the basics, I think people kind of skip over the basics of things. So it's always good to help those that may overlook things, because you might overlook something, and then I come in and I show you, like, look bro, don't even make it this hard, do it like this because it's way easier on your brain, for example. But yeah, just all in all, like these past couple of months, I've been showing you, and now we're getting to a point where it's like, I've shown you so many times, you should have it by now. You should definitely have it by now. Like if you're watching day 13 right now, honestly, I would say, bro, you're ready to trade. Like if you successfully watch 1 through 13, I would definitely say you're ready to start like actually getting into the markets and trading, because I'm big on people building up. So with me, I don't like when people get into the market with $100, $200, $500. Like the old me would have said that, but it's not sustainable. Not everybody has the skill to have that proper risk management and scalability when it comes to that, because you have to have proper risk management to get you from the low numbers to the high numbers. And then once you get to the high numbers, you have to have just overall the mindset of scalability and not being afraid of bigger numbers. But I'm big on people saving up their capital on the side, having safe income, and using that saved up money as their trading capital. Because when you save up money and you still have active money, so I always recommend people freelance or work a job. I'm never going to tell you not to work a 9 to 5. That is like the dumbest shit I've ever heard in my life. I used to love working a 9 to 5. Did I like waking up in the morning? No, but I was making money. I was happy, like in a sense of like, okay, like, I'm happy. Now it probably would change, but who knows, right? Things happen for a reason, right? Because I know now it's way harder than it was a couple of years ago. And this is not saying that you should fault yourself for not getting into it years ago, but this is definitely me saying that you have to work twice as harder than you have to work twice as harder now than you had back then. So put more pressure on yourself, because if you would have did this a few years ago, it would have been way easier, but we're here now, right? We're talking about right now. You need to go way harder than what you're doing. You need to honestly, like, fuck what anybody else says with all this like guru shit about no 9 to 5s. Bro, go work your 9 to 5, pick up 2, start saving up capital. Once you save up that capital, you need to be learning while you're saving up money. Do not touch that money and try to trade with it. Save it to the side. And then once you are finally done learning, when you feel like, okay, I got it, I understand it, practice on demo while you do this. And when you see your stats, and I'm not talking about, oh, you turned the 100K demo account to $1 million. That doesn't count. When you see you started with a 100K demo account or $1,000 demo account, if you're going to do realistic, 10,000, whatever, you take that $10,000 demo account, $1,000 demo account, build it up for a couple of weeks, couple of months, however long it feels like you need to learn. If you're seeing growth, you're seeing good win rates and good risk to reward and all these things, then you jump into your live, right? People misconstrue the overall theme behind trading in the first place. we're making financial decisions. You're making an investment. For me, as a swing trader, is more of an investment for a long-term idea. Trading is just overall you speculating where the market is going to go, and you're putting your money behind your thought process and your analysis, right? So most of the trading stuff does come from, just overall, like how you look at the charts, how you view the markets, what do you see in the markets? That's you, right? But everything plays a psychological role because the way that you think about the charts is all coming from here. And, I don't want to like get off topic, but I definitely like talking about psychology a lot. So you're definitely like, if you're new to the channel, I'm definitely going to talk about a lot of psychology when I can. But everything, like the decisions you make, you have to, like, as a beginner, you're probably thinking in your head like, dang, okay, let me get into trading. Let me try to find a setup so I can get into a trade right now. What do I see? You're kind of like looking at more of like what's happening now type of thing. Like, for example, if we see like the markets is rejecting, we'll kind of think in our head, oh, we should buy this because it's rejecting the downside type of thing. That's kind of how you're thinking. You're not thinking in a sense of like, what could this do in the next a week or two or a month from now, right? And I think that's what separates a lot of people. Like I said, I'm not friends with a lot of people in the trading industry. I try not to hang around anybody that, is in the trading industry and their influences because, like half the people are not traders in general, but, hey, they think, time is coming. The time is reckoning for everybody. So like you do people bad or you just overall, if you do people wrong, if you lie to people, like your time is coming. But yeah, sorry that I keep saying, I'm just, thinking and just talking to you guys. Like this is me raw, chilling and just talking to you guys. But what I would definitely say is everything is psychological. The way that you think of things. As a beginner, you're going to think of things in like, you're going to think fast, money, how many trades can I get type of thing. But like as you start to elevate, you start thinking of positions. Like you don't call them trades anymore. It's like more of like, here's a position. I'm looking for a good position to put myself in. And you might say that now, but you really don't have like the actual mindset of a position. Positioning yourself is very, very important when it comes to pretty much anything, right? So think about it like this, right? When you are playing like a war game, an example, or a strategy war game or something, you always want to put yourself in the best position, right? Anything in life, you don't want to put yourself in a messed up position because then you're messed up, right? You always want to put yourself at a good position, right? When it comes to going out, let me give you an example. People go out every day, all over the world. People go party every single day. Every single day in this world, somebody is doing some type of party and some type of something, right? With that being said, partying is not bad. I party, you probably party, maybe you're over it, who knows, right? We all like to have fun. But there's people out here that like to have fun no matter what their finances are, which is a bad thing. So someone can have their last $100 and then they know they have to pay rent in a few days, but instead they want to go have fun. So they take that $100 and they use the $100, which then puts them in a bad position, right? Okay, now person B, so that was person A, person B has $100, but he wants to go out. Instead of going out that week, he chooses to work one more week and then have $200. I'm just making up numbers. These numbers are not realistic, but next week he has $200 in total. This time he can go out for that week and still have $100 when he gets back, right? Or after he has his fun, he still has $100. That's cool, So with this being said, you always have to think of trading in that way too as well. Positioning will definitely come, like thinking in the mindset of like positioning and more of just like I need to be in a trade and where's my entry and stop loss. It's more of like, where should I position myself on the chart where I can overall know that the probability of this setup is going to be high, and also put myself in a good position where if it doesn't go my way, that I can see that clear as day, right? Because there's some people that put themselves, let's say, in a late trade. So they get in pretty late, a late entry. And they might put their stop loss, which is, a couple points away from their entry, but it doesn't necessarily mean that their trade is wrong, right? You have to understand something about trading. Trading is about trends and just overall market structure itself. Trends. They're always going to make you the most money ever, whether it's a downtrend or uptrend, right? People have to realize you have to put your risk levels, or you have to put your stop loss levels at points where if it hits your stop loss, your trade is invalidated, which then gives you the idea, or it gives you the mindset that your positioning was wrong. Your overall idea was wrong, right? Do not put yourself in a position where you get into a trade and it hits your stop loss and it doesn't break any type of structure to show you that the trend is changing, right? Also well with this as well. So that was the risk side of it. What about the making money side? If you put yourself in a good position, you have options now. So now you have options. Same way with person B. He went to work the second week. Now he has options. He can either go out this week or work another week and have 300, right? Trading is the same way. You want to be able to be in a trade and be able to make decisions, right? Once you get into that trade, you're in this trade and you're overall like, I'm up a pretty decent amount. Price is at my target level. I can probably take partials here and then try to see if I can hold for more, right? That's a decision. Because you have a good position, you're not worried about, am I going to be at a loss? You're already at your target point. You can make a decision about it based off your position. You might be price is probably way past your entry level now. Like, you're super in profit because you've been following the trend, right? And that's what I'm gonna show you guys today. But yeah, these things really matter. Like, when you think of it like this, position. And I'm gonna keep saying that because it's one of the biggest things that helped me. Like, instead of thinking of it as like a trade, I just put myself in a good position so then I can scale out if I want or scale in if I want. I'm not really big on scaling in, but scaling out. That's one thing. Risk is very important. Please stop risking like all your last dollars, bro. Please do not get into trading if you have no capital. Please don't get into trading if you have no capital on the side to trade with. You need at least $2,000 to $3,000. Now, I'm USD, so you convert that to however much it is, right? And I say this is because when you start trading, you don't want to trade your way out of your job, if that makes sense. So basically what I mean is you don't want to be that guy that uploads his, he deposits his $500, $1,000 every week into a trading account and try to flip it that same week so that way he can probably get up to 10 bands and don't have to go to work next week. No, don't do it that way. Basically, once again, do not deposit trying to trade your way that week out of your job for the next week or however long you think you're going to do it. You should realistically be going to work, making a set schedule for yourself. I don't know how your life works, but for me, I worked 2 jobs. I bought an Apple Watch at the time. I set alerts on TradingView. And when I set alerts on TradingView, the alerts would come up on my phone. Or come up on my watch. I would pull out my phone and I would be like, okay, this is the trade that I want to get into. Before I went to work though, I made my analysis. I set my alerts. I had notes on the alerts to tell me like, hey, price is ready to buy. And if it hits the alert, I'll pull out my phone. Oh, price is ready to buy. Click buy. Set my stop loss. Get off my phone. It takes 1 minute, right? There's always a way around things. People make a lot of excuses. Oh, I can't trade because I got to go to work, or I can't trade because, like I don't have this, or I don't have that, or I can't do this, or I can't do that. There's always a way around everything in life. There's always a way. Always. Always. And as you start making money, you'll start to see that if you have money, anything is possible. Literally anything. Nothing in this world is impossible. Like, it might be like you can't, and don't think of like some hypothetical shark jumps and eats a tiger type shit. That's obviously impossible. But when it comes to real life situations and things that are, like when it comes to numbers, no number is unobtainable. There's a will, there's a way. There is always a will and there's a way. It might be hard to get there, it might be easy to get there, but there's a will, there's a way. So with this being said, risk, please don't go in risking your last dollars. What I like to do, especially starting off, is definitely taking, let's say I have $1,000, right? I put it into an account. And this is for an example, right? Me personally, because when you start trading, you're trading your way out, or you're trading for becoming a full-time trader, you want to really risk like maybe 5 to 10%. And this is what I would do. I'm not telling you to do this, not financial advice, but what I would do is calculate how many trades will it take for me to lose to blow my account. I look for 1 to 3 risk to reward. So that means every trade that I risk, if I'm risking $100, that means I should come out with $300 to $400 risk to reward, right? Just go watch my risk management video. You'll pretty much understand it, right? I like to do it that way. The reason why I like to do it that way is because when you're trading, or when you're working a job and you're trading, essentially, some of you guys are probably making around like $60 to $90 a day, right? When you trade, that should be your mindset, right? But instead, since you're risking $100 per trade, $300 in a day, $400 in a day, you should be happy for these trades. Since you're happy, it only takes 2 of these trades a week to make your paycheck. You only need 2 solid trades a week. 2 solid trades. 2 trades, not 20, 2 trades. You only need 2 trades, right? And how the market works is it's not always going to give you exactly $300 or $400. You might have a big day where you sitting in a trade and it goes all the way down crazy more than your TP and you make $700 in a day. Once again, it goes back to positioning yourself. Position yourself correctly. You'll get whatever you like. You'll get a better outcome, right? Trade in session 2. Just go watch all the videos I've made so far, because I'm pretty much repeating myself. But listen, trading is not as hard as people make it. I will stand on that until somebody shut me down, right? I will stand on it forever, right? Life in general, like, I don't want to sound like political or anything, but even when it comes to life, bro, like, some of the things in life are not hard for people to do, but we tend to overthink things. We tend to overdo things. Like, things are going to be an obstacle, but you're human. Push your limits. Push your limits. I think we use I think it was like a thing, I'm not sure on the percentage, but we only use a certain percentage of our brains. Think about it, bro. You have a lot of potential. You have a lot of potential. You just have to literally push yourself to the brink of your limits. Literally just push through your limits. Bro, I'm telling you, bro. I used to be I was never I wasn't always this way. Like, I was a smart kid in school with like books and stuff, because like books is easy. It's easy to remember shit. But when it comes to this mindset that I have now, I didn't have this when I grew up or when I was 16 and homeless. I was homeless at 16. 17, I found my biological mom, and 18, I found trading. And even when I found trading, bro, I was still super irresponsible when it came to finances. My mindset was just, oh, play video games and talk to girls. That was my mindset back then. Like, I've built this because of trading. Trading has made me build this mindset. Trading has truly made me build this mindset and eliminate greed and eliminate a false hope in a trade or marriage in a trade. It made me leave so much behind. Revenge trading, it's made me leave so much behind. But these lessons have also taught me in life how to think properly, how to basically go about my, or how to think properly, how to go about my day, how to talk to people, how to just overall be a better human being. Trading is something that will crush you, but it will also build you into the new person. So when it comes to this, please come in with an open head, open mind. When you have an open mind, open heart, don't be gullible. Don't be, just don't fall for everything. But when it comes to this trading game, open your mind to things, but also keep it very simple. Don't let these people fool you into thinking trading is super hard. And that is my tech talk. I hope you guys enjoyed. I love you guys so much, bro. Once again, I'm gonna always tell you guys, like, thank you for pushing ICC, and we'll continue to push this, continue to push the movement. I'll be in London on Monday. I'm throwing an event on Monday. I'll be there Sunday, but I'm throwing an event on Monday. And then I'm back in the United States in like 7 more days. So next year, we're gonna do a tour. I'm still trying to decide if I should do the stream in November. I really don't want to do the stream in November. It's not because I don't want to stream, but I definitely want to show you guys more trades, live action. I think it will be very helpful and just overall grow us even more. Some people I see a few haters sometimes, they'll be like, oh yeah, I can't wait for him to stream so he can fuck up. Yeah, I'm not fucking up. Anyways. Yeah, that's pretty much it. Let's get into the breakdown of today, and let me teach you guys something when it comes to the charts, because for some reason people only think charts matter, but psychology, everything I just talked about, that is more important than what I'm going to show you now. Hi, I'm making this video prior to anything happening. As you can see, price on BTC, we had that sell-off, of course, the drop, quote unquote. Everybody says, oh, because of Trump. Of course, Trump influenced it to push down more, and it gave it more volume, but overall the structure in the beginning was bearish in the first place. So then we came to the support level at 110. 110 ended up pushing up all the way to 115 before 115 got into a level of where sellers were at, right? So from here, price ended up selling down to 110 again, failed to break. Tried to push up, failed to go any higher than 113. So now we have a lower high in the market. So because of this lower high, now price is pushing down, looking to retest or try to re-break out of 110. If we get a break below 110, I have an alert at 109. Anything under 109, you know, BTC is obviously bearish, but the reason why I'm saying that is because I'm looking for Solana to continue to sell. I'm looking for Solana to continue to sell under 189. Once it goes under 189, it will start heading to 173. And then from 173, we'll be looking for 155. Overall, as you can see on Solana, we can have uptrend. So we have a higher high, higher low, higher high, higher low, higher high, higher low. Price didn't make a higher high, but it did make a higher low, which then ended up still being bullish, which is cool. Price, higher high, boom. And then we have a break of structure here. So we have a break. Price tries to pull back up to redeem itself. So this was when that drop happened. Or this is before the drop. Price ended up redeeming itself, making a lower high, and then ended up making a lower low. Now we have another lower high, looking for that lower low. So overall, all in all, we're looking for Solana to go bearish under 191. Once it goes bearish under 191, we just sell price. So yeah, I'm making this video before anything happens. Look at price. Literally look at price. Look at the timestamp. Look at the timestamp. All right, so currently I'm in a swing trade for $8.5 million, and I've been calling Solana for like the past 2 weeks. I really think crypto is just gonna take a huge dive, but I'm not the crypto guy, so what do I know, right? But technical analysis wise, it just doesn't really look too good. So I'm gonna continue to sell just based off the technical analysis of it. And until I see signs of bullish, then I'll get out. But right now I'm holding that swing trade for $8.5 million. And overall, like I don't I don't think I'm gonna get out anytime soon. So with that being said, I'm gonna show you guys just the setup that I've already shown in Telegram and I posted on Twitter, but I'm gonna show you guys on Instagram too. Bro, you can tell I've been locked in. Like, look, bro, your bro's grown a beard in like 2 weeks. But all right, so as you can see, this level of support had buyers pushing price up from this level. So anything under this level would have been indicating that price is selling, right? So we got that sell off last week, which ended up coming down to 173. Price ended up correcting in the market. I went down to the 4-hour time frame. When I go to the 4-hour time frame, you can see that the market stops at 210. Once it stops at 210, you can start to see more lower highs are coming into the market. And then anything under that level, which is 192, we're selling price all the way back down to 173 and looking for 173 to break and go down to 150. So once again, 192 is the level where buyers had control above. So the moment that price came back under 192, it had selling momentum to 173, which it did once again, which is what I sold. All right, guys. So currently we are looking at BTC and Solana. So as you've seen in day 12, Solana was like right around this level, if I'm not mistaken, somewhere around this level. And I was telling you guys how we was looking for price to be bearish, under 190. It came under 190, went to 173. So this is me basically showing you the after. Um, and just all in all, I really want to say, let me turn this off because I don't like looking at my face sometimes. But when it comes to trading, I really want you guys to understand that it is very simple. You have to make it simple for yourself. So I'm gonna show you some ways that can basically help you overall think and have a good thought process when it comes to trading. So, um, like I explain all the time, levels or swing highs and swing lows, think of it in a seller's and buyer's mindset all the time. I don't care what you think it could be, just think of it as in a buyer's and seller's mindset. So the last video I showed you, this is a level of where buyers were super strong at. The reason why we know that price is super strong at this level is because it was going down, it was selling to a point until it completely shift. So we can visually see this, right? We can visually see the dramatic change that price has made. So when we look at things over here, we can see that price drastically changed at this point and ended up selling down, right? And that goes for anything. So here, dramatic change. Here, stops here, kind of sits here. That's cool. That means something's here, right? Something's here. Price then has a dramatic change from here to here. And then we just have dramatic changes. They're small, but they are very important, right? Even here, price gets up to a point and it stops here. I wonder why it stops here. Because there are sellers at this level. That is very important, right? So really, when it comes down to swing highs and swing lows, it's more of a visual cue, something that comes over time. Our like for me, the highs and lows and lower highs and lower lows have never been hard to me. Like you can visually see it. I think people are probably zoomed in too much. Um, I don't know exactly what it is that you guys struggle with when it comes to finding the swing highs and swing lows. Some people ask about what candle formation it has to make. Is more of a visual cue, not like, oh, price needs to have one green bar and one red bar for it to count as a swing. It doesn't work like that. Swing high just means that price comes up to a certain high point and then it goes the completely opposite direction because of a reaction, right? So when it comes to this, um, I just overall want you guys to know anything under here. So if we have buyers here, if prices broken under this level before, this right here, this movement that price has made, so from here to here, this movement right here, price is going to repeat this if price does it again, right? It's going to repeat this movement once again. So when it breaks again under this level, it's going to repeat this movement because essentially what is going on is because we have buyers here, right? We have buyers here. The moment price breaks below buyers, they become sellers. They switch up, right? So sellers. So the moment price switches up, anything under here is sellers. But what essentially is going on is these sellers are trying to find buyers. So it's going to continue to sell until it runs into buyers, right? So then when price runs into buyers, they exchange. So everything is now equaled out, right? So now sellers run out because that means there's enough buyers here to get all the sellers out or to equal up with the sellers. But then buyers become way stronger because they've been sitting down here. Buyers have been sitting down here, but we've just now discovered that, right? This move has discovered that this is a zone of where buyers are at, right? So think of it like this. Right now, anything down here is an imaginary zone for us. Let's think about it that way. I know some people are going to be like, oh, bro, you can just use an indicator to see the levels. I don't want to do that. I want to let price show me that is the level that it's going to do. When we're not predicting what price number or what price level price is going to have buyers at, we're letting price show us with reactions and price action and market structure. We're letting that show us where it's at, right? So with this being said, there's imaginary levels down here that we don't know about, right? So when it comes to that, we let price make that decision. So when price is selling, so here, I'll put this back up, selling, they equal out here, boom, sellers gone. Now we just have buyers. Buyers then, since they've been sitting here for so long, they have a substantial amount of buyers. So then you'll start to see a reaction. You'll start to see that reaction because buyers have been sitting here waiting for their moment to be seen. And once they're seen, they become popping. So they become popular, or they become a lot because they've been sitting down here for so long. And now the spotlight is on them. So now they're going to use that spotlight to try to take advantage of much of the market as they can. So then what happens is you start to see that the market starts to have a reaction and start to push up. There will then be a point where price or sellers will no longer tolerate this because once again, this shows us sellers are in this market, in this trend, right? This is letting us know that the market is in this trend. Then we have this correction, which is basically the buyers trying to fight back as much as possible. This is why break and retest is not the best way to look at this either, because there will be some times where price breaks, comes back, and you might think it's a retest, and it just keeps coming back, keeps coming back, keeps coming back. Think of this as just a regular pullback. How we know when the pullback is over? Quite simple. So whenever you're looking for this correction, you'll start to see the market structure change. So if you're in sales or if you see a sell indication, so this is what I'm, dragging my finger across. This is the initial move that caused an indication. An indication is at the end right here. So this is where the indication is. This is the breakout. This is where the indication is. The indication is telling us from this breakout, price is coming to this point, indicating us, right? This is indicating us that price is coming here. Then we have the correction. The correction is normally after the indication, and this is just basically the opposite trend or the opposite side fighting a back, whatever the indication was. So if the indication is bearish, the correction is going to be bullish. So the best way to get into the continuation is to know when price is going back bearish. How do we know that? Well, this initial indication is already signs that price is bearish. It is strongly bearish. So anything under this black line is going to be our best probability that price is going to do the same thing. Because remember, buyers are sitting here, but once price is under here, it is bearish. So if we're on a correction and we're looking for price to be bearish, it would just make sense to sell back under here because we know price is bearish. Once again, let me repeat. If buyers are here pushing price up, if we break here the first time, this is showing us price is bearish to this level. So price is bearish from 190 to 173, right? Because of that, we have a correction. So if you are confused on when the correction is over, sell back under the level that showed you price was bearish in the first place. So sell back under 190 because then we know buyers are no longer here, right? So with all this being said, make it as simple as possible for yourself. Trading is not as hard as people make it. I've shown this time again. You can go back on my channel. You can go through my Instagram highlights, Trades by Sai on Instagram. You can go through Telegram, my videos, constant videos of me showing before and after. It is the same thing, the same setup. If a level shows us that price from this point to this point is going to be bearish, that's all we have to do is wait for price to come back under that level and sell it again. Now, there's a little bit more of an advanced tip to help you out. Since you're looking for price to be bearish, there's always good signs to track your other swing highs and swing lows. So notice how price went on this correction and got to this point, this high, right? It got to this high, price tried to shoot down. Remember, there's buyers here. So this black line, remember, there's buyers here, right? Strong buyers. Buyers ended up pushing price all the way up to its highest point over here, right? So there's a lot of strong buyers here because they made this whole trend. Remember, look, this was a downtrend at first, but the buyers here at this level push price up so hard. So the fact that prices gotten, those buyers have gotten bypassed and broken, this shows that under this level, buyers have no strength, right? Because buyers didn't want to let price go any lower this time, but price let price go lower this time. So that means buyers are now weak in this market under this level, right? So with that being said, things to help you out. Price gets up to this level, high, rejects because there's buyers here. So then it tries again to break out of this high, fails to do so, right? I'm big on candle closes. For me, candle closes are very important because this is basically saying like, hey, this is a closed deal, right? So with me, these will go here. We can now see that price has a high, a low, a lower high, because this high is lower than the previous one, right? Boom. So now we have this and this. Then you see price break out of that level where you see there are buyers here. So this level here had buyers here. Then you see price break under that level. This is signs that price is going bearish. So then you sell price from here to down here. Your stop loss will always go above the reaction. So wherever that lower high is and price pushed up again, made another lower high, rejecting the upside and then pushed down. So your stop loss will always go above the lower highs. So if you're in a sell, your stop loss goes above the lower highs. If you're in a buy, you will always put your stop loss under the higher low. So your stop loss will be here, your entry will be here, right? So let's turn this green for you. Green, red. And that's how it's supposed to go, right? So with that being said, don't make it super complicated. Um, keep it as simple as possible. Overall, like, don't make it as hard as don't make it as hard as people say, bro. Literally, don't make it as hard as people say.